I'm Anthony Valeri, Director of Investment Management in Wealth and Fiduciary Services. Thanks for joining. It's an election year, and the Federal Reserve has forecast interest rate changes for later this year. Today, we look at the misconception about the Federal Reserve making interest rate changes during an election year. This notion is based on the belief that the Fed will refrain from changing interest rates to avoid the appearance of not being impartial during an election year. History, however, tells us otherwise, and the Fed has not been afraid to do what it has to do. Let's take a closer look by looking at each election year and of interest rate changes by the Federal Reserve each month. In fact, the Fed, as you see here, has either raised or lowered interest rates in every election year since 1976, with only one exception, 2012. And you'll see that the Fed in most election years has not only changed interest rates, but has made multiple interest rate changes in an election year. The Fed has been active on monetary policy and not shied away from adjusting interest rates as needed, given ongoing changes to the economy and the level of inflation. Let's take a closer look at the month of October. One would be more suspicious if the Fed was active just ahead of the election. In 2008, the Fed cut rates twice in October, once in an unscheduled meeting, in response to the unfolding great financial crisis. Aggressive and timely Fed action was certainly warranted that year. In the late 1970s and early 1980s, monetary policy was conducted differently, with rate changes tied to the growth of the money supply and therefore somewhat formulaic. Rate changes back then often occurred outside of a scheduled meetings as data changed. It's hard to make a case the Fed was trying to influence the election back then. Now it's back to 2024, and the Fed is set to change interest rates once again during an election year. Here we show the market implied level of the federal funds rate over the remainder of the year. And the market implied Fed funds shows that the market's expecting roughly 0.75% rate cuts priced in for all of 2024. If the Fed were to surprise markets in October, we could make the argument the Fed may be partial, but with the last scheduled Fed meeting ahead of the election on September 19, this seems once again very unlikely. And it also seems unlikely the Fed will produce a rate change in an unscheduled meeting in October. What the Fed ultimately delivers is unknown, but Fed Chair Powell at his recent congressional testimony suggested rate cuts are coming. Finally, with regards to the stock market, while politics dominate the headlines in an election year, it is important to note that the stock market is not partisan. Historical returns show just how steady stock market performance has been under a variety of political regimes. Here we look at the S&P 500 index and its predecessor index from 1933 to 2020, and it shows just how steady and consistent those returns have been. On the far left, we have a Republican president with a Republican Senate, Democratic House. Move one to the right, you have a Democratic president with a Democratic Senate, Republican House. And as we move to the right, you see the different political regimes. And under most of those scenarios, with the far right showing a Democratic Congress, Republican president, which has been a rare combination, that with rare exception, performance has been steady. Why is that? It's because the stock market focuses on economic growth, corporate profits, and the level of interest rates, much more so than politics. I'm Anthony Valeri. Thanks very much for joining. We'll speak to you again soon.